Welcome to episode 4 of the Practice Powerplay podcast, where we have a great treat for you today. We have the founding partner of Mahan and Associates, Garland Mahan Jr. Welcome, Garland. How are you today?
I'm doing great, Chris. Glad to be here. This is my first opportunity to be on the podcast, so I'm looking forward to it.
We have a podcast with the legend, ladies and gentlemen. So, the tax crusher himself, Garland Mahan. Anyways, Garland. Well, hey, thanks for hopping on today with us. I think we have a significant event happening this year. I think we had a debate, last week, and we got a few days left before the big election day on November 3rd. So, I know that both candidates have two very distinct tax platforms that can affect most doctors today significantly one way or the other. So today we're going to be going over the proposed tax plans put forth by Biden and in contrast by Donald Trump to see how that would affect doctors in today's tax environment and how it would impact their bottom line with opportunities and potential challenges as well. So, Garland, what are you thinking about this? What are you seeing out there, and what do you see on the landscape via the tax code potential changes?
Well, I think there's quite a few changes that's been proposed. Now, whether they're going to come to fruition, I don't know. But I can tell you, Biden has put forth a lot of ideas, but it's lacking on detail. I can tell you that Biden's plan is projected by the Tax Foundation to raise over $4 trillion over the next 10 years. So he is really attacking the taxes, if you will, by raising the taxes. That's how he's creating the additional revenue, where Trump's position is he wants to create revenue by growing the economy, growing jobs. So the two individuals are coming at this from two diverse positions. So obviously, when you're coming at something from two diverse positions, your taxes or what you're trying to accomplish is going to be quite different.
Gotcha. So we got two very distinct tax proposals on the table, going at two different strategies, time-tested strategies, of course, in terms of how we generate revenues and fund our federal government. So, are we wasting our time looking at it right now, or do you think it's definitely worth the review?
I think it's worth the review, and here's why. A lot of the things may not come to fruition if Biden doesn't get elected. A lot of things may not come to fruition if Trump doesn't get elected. But what I can tell you, by reviewing some of the major things today, it may help some of the constituents out there, or the electorate, if you will, make a decision on who they want to vote for.
Yeah, nothing swings a vote like a dollar, right?
Well, I wished I had said that. That's a great phrase.
Well, we hear a lot about tax brackets and rates and how are the candidates differ? How do they differ between the tax rates and effective tax rates?
Well, that's a very good opening question, because I think that's one of the most powerful differences between the two candidates. Where Trump in 2017 with the Jobs Act, he reduced the number of brackets, and he enlarged the brackets to the point that it reduced the amount of taxes that you would pay. The top rate was 39.6. His now top rate is 37%. But let me take this another step forward. Biden wants to come in and he wants to raise back up to 39.6% top bracket. Well, what we don't know, Chris, and this is the scariest thing. They say the devil is always in the details. Mm-hmm. Well, the details in this situation is, what will Biden's brackets look like? Let me give you an example of that. For a 24% bracket under our current system that Trump passed or got passed in 2017, from 168,400 to 321,000 and change, you're in a 24% bracket. Well, just those dollars inside that bracket you would be taxed and you would pay 36,700 and some odd dollars. But let's say Biden comes in and he compresses the bracket, and that same bracket spectrum of 168 to 321,000 popped you into the 35% bracket, you would pay 53,500 and change. That's an increase of 16,836. So here's what we know with the brackets. We know that he wants to raise the top bracket. But what we don't know is how the brackets will compress or enlarge. Trump enlarged them. I really feel if he's wanting to raise this money, he's going to compress the brackets. What that means is people will get in a higher bracket much quicker.
Right. So that means that their effective tax bracket based on their income thresholds, he's basically compressing the tax brackets potentially, and that's how you're going to raise revenues is you're going to get them faster to the top brackets. If you make, 100,000, 200,000, 300,000, you'll hit into those next thresholds faster, which effectively raise your effective tax rate materially.
That's exactly right. Now let's talk about long-term capital gains because this is the other big play that he's got. Right now, you have zero tax if you're married filing jointly. Everything I'm going to talk about is married filing jointly. Mm-hmm. If you have capital gains, long-term capital gains I'm talking about, of below 78,000, you don't pay any long-term capital gains tax on it. And if it's between 78 and 488, you pay 15%. And if it's over 488, you pay 20%. Well, Biden wants to come in and he wants to just almost do away, period, with the 0, the 15, and start at the 20. This is for long term. Mm-hmm. And let's take an example. Let's say you make over the 400 and let's say you make between the 78 and the 488. Well, currently that puts you in a 15% bracket. Well, those dollars you would pay if you made, that would be $410,000 of gain, long-term capital gains. Then at 15%, you'd pay $61,000. But let's say in Biden's plan, depending on your bracket, let's say it puts you in a 25% long-term capital gains bracket. That would give you $102,000 of tax. But here's a kicker. For everybody that makes over $1 million, I believe that's right. Yeah, $1 million, he wants you to pay ordinary rates. The top tax bracket of ordinary rates at 39.6%. In our example, you would go from current day 61,000 of tax to Biden's day of 162,400 of tax. That's well over $100,000. Not well over, but just a little over. That is a big change, Chris. So when you look at the regular tax brackets and the long-term capital gains brackets, there's a significant difference between the two candidates.
Wow, that's interesting. That's good information, Garland. That means anybody in any tax bracket based on their ordinary income, if they sell an investment property or have some long-term holdings in Netflix or a stock, they could make 50 grand a year, but have 100 grand in stock, or assets. If they sold them, that looking at a $20,000 tax bill versus a zero if they're in the lower income rates.
Right.
And if you make more than $1 million a year, that is essentially doubled your tax.
No question. More than doubled.
Yeah.
Slightly more than doubled. Exactly. Well, you're going from if you add 15 to 50, or you could say 20 to 20. Yeah, it doubled it. Yeah. Yes, you're exactly right. So that is a stark difference.
Yeah, that's those carried interest boys on Wall Street shouldn't like that very much, but I guess we'll see how it plays out for them. All right, what about tax credits? Tax credits are a lot of times the things that a lot of tax planners don't review or take advantage of, and we've had, at Mahan and Associates, a lot of success with, tax credits and deductions. What do you see coming down the pike with that?
Well, I really see that this is where Biden, I think, is really, if you look at his plan, Chris, in any area that he's trying to stimulate our economy, I think he steps out here a little bit and does just that. For example, right now our solar energy credit has kind of waned down, it's phased out. He wants to bring it back, and then he wants to make it a permanent part of our tax system, and that's solar energy credits. He also wants to, and he's very vague on this, but he wants to expand and have something called new market credits. Now, Chris, if you turn around and ask me, well, Garland, what is new market credits? I can't tell you what new market credits, because he has really not expounded on what new market credits mean. However, I can tell you over on the Trump side, he wants to enact what's called Made in America tax credits. And he wants to incentivize, if 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 it's made in America and it used to be made in China, it's almost like President Trump is taking direct aim on China in some of the rhetoric. Now, obviously, with the two candidates posturing right now, Trump seems to be very happy with, what his tax act of 2017 did. And Biden's the new kid on the block, the new president. So obviously he's got more things, going on. But some of the other credits, Biden is very child friendly. Right now, we have 3,000 up to $3,000, depending on your bracket. For one child, you can get a credit for child care, or for two children up to two, you can get 6,000. Biden really wants to increase that and make that up to 8,000 and 16,000 for child care credits. But again, these come with phase outs. And again, I have to say, the devil is in the details, and I don't know the exact details where this is going to phase in and out. Here's something interesting. Biden has what's called a first down payment home purchasing credit, that you can get a credit up to $15,000 for your down payment. Now, I don't know what the percentage is exactly. I don't think that's been published. If it has, I missed it. I'm sorry. But that is something to really incentivize, new young people getting out and buying their first house and making a solid down payment, on that house. Um, he also Biden wants to restore the full electrical vehicle tax credit. That had phased out. There were a certain number of vehicles, and I think if 755,000 electric vehicles, if you were one of the first to buy, you got this big credit. Well, we've met that threshold, and that's pretty much phased down quite a bit. He wants to bring that back. However, he puts this caveat in, Chris, that he wants to target the middle class. That's by and large a lot of the new stuff on tax credits.
Maybe on those electric vehicle credits, they'll bring Tesla back. I had a client call me and ask if he could get a credit on Tesla, and they had a limit on how many models would be applying for the credit. So I told him you can't have a Tesla in 2020, but you can get a Chevy Volt. They didn't seem as happy about the Volt as they did the Tesla, but
Well, that's possible. I understand that.
Well, what about Social Security? You seeing any major changes come in Social Security, Garland?
I don't know how major this is, but I can tell you Biden has mentioned he wants to shore up Social Security, where Trump really hasn't talked about it. Trump's plan, I believe, is raising the age limit before you can start drawing Social Security. Where Biden has come in right now on Social Security, we pay 12.4%. The employee pays 6.2. The employer matches with 6.2 for a total of 12.4. Well, Biden wants to add a second tier to that. He wants to raise it all the way up to, well, excuse me, right now this year, the cap is $137,000. So on $137,000, you pay the 6.2, the 6.2 match for the total of 12.4. Biden wants there to be a gap. Then anybody that makes above $400,000, the Social Security kicks back in again for them.
Wow.
That's the way he wants to shore it up. So there's a big gap between 137 and 400. I can tell you at reading and looking at some of his proposals, he has the idea that 350 to 400 is the upper middle to high income level. And I looked that up. And I don't know if individuals know this, but if you make $380,000, you're considered in the top 1% of all wage earners. And I also looked up how many people make, on average, $1 million a year. There are approximately a little over 236,000 people that, on average, make above $1 million. So I guess congratulations to them. And I know you didn't ask that question. That was just a little side tidbit. But when in reading Biden's plan, I thought, wonder how many is going to really get hit by some of the things that he's proposing.
It's 250,000 people. Well, that's a pretty significant tax increase. At 12.4, or and I'm sure it'll be the same exact, side on self-employment taxes. If you make more than that 400, that's going to be a target for a lot of people to keep their income levels at,
Correct. Exactly.
Gotcha. How about estate taxes? I know that, the Tax Cuts and Jobs Act and some prior legislation have really almost all but eliminated estate taxes in a lot of places, federal for that matter. Typically, historically, Democratic sides of the ticket look at that as kind of free money, right? There you go. So
right. Yeah, they really have. And I think Biden is a little bit vague on this. Right now we have, I think, an exclusion per individual of $5.4 million in change. I don't know the exact number because it gets indexed with inflation every year. But Biden wants to pull that back down. The top tax bracket is 45%. No, it's 40%. He wants to move it to 45%. And I'm talking about for states now. And he wants to reduce down the exemption to 3.5. But he's not, I don't think that's a part of his platform. He's just talked about that in some speeches. But I think everybody being on Biden's side of his platform, looks at that as an opportunity to get additional tax dollars.
Gotcha. What other proposals are out there between the two?
Oh, gosh. Trump is wanting to reduce. Right now, we have a corporate rate of 21%. Mm-hmm. Trump is wanting to reduce that down to 20, where Biden is wanting to increase that up to 28. Now, what does that 8 percentage points mean? Well, it could mean if a employer decides to bring jobs back to the United States. Now, I can tell you that in certain corporate markets that suddenly essential, like pharmaceuticals and robotics, and that's really hitting China hard. He's in his manifesto that came up. Everybody can have a manifesto, just not Biden and Bernie Sanders. But in his act, he's talking about 100% expensing for everything. There's no capitalization, expensing for everything. And I thought that was interesting. And also, if you take your company, this is under Trump now, if you take your company out of the United States, when you sell your goods back, they will automatically be hit with a tariff. So you will be penalized in that vein. Something else that kind of concerns me is that Biden wants to normalize retirement. He wants to equalize retirement. He's saying that the upper income or the owners are putting away proportionally more money than the rank and file employees. And he wants to equalize the defined contribution plans and to make it easier for them to participate at a higher level. Now, How he's going to do that, I don't know. I can tell you from our own experiences here at Mahan Associates, there is a lot more individuals that have retirement plans than might have retirement plans because it does favor the owners. But however, if it didn't favor the owners, they may just go ahead and do something after tax. Well, if they did something after tax, guess what, Chris? The employees aren't going to get any kind of contribution from the employer. They'll just do it on their own, a different way, and maybe an unqualified situation through an insurance contract, or something of the nature. But Biden has been very vague, on this, on how he wants to equalize the retirement. Oh, here's something else. Back before the Trump Act of 2017, we used to have a phase out on itemized deductions. Mm-hmm. Biden wants to bring that back. He wants to bring back the phase out of itemized deductions based on adjusted gross income. I found that to be very interesting.
Would that essentially be kicking back in? I know that a lot of the teeth of AMT got pulled on the Tax Cuts and Jobs Act. I'm assuming that's one way to come back and normalize or phase out some of those deductions. Is that a way to do it?
Yeah, I think so. I mean, obviously, there wasn't that kind of rhetoric explaining that this was behind it, but I think you very well could be right. But I think, as I said at the beginning, as you see, there's a big emphasis on the Biden-Harris, I believe is his running mate, correct? There's a big emphasis on increasing and raising additional tax revenue, and from just purely raising taxes, not incentivizing, where Trump's plan seems to me to be more of, we're going to get more taxes by incentivizing and growing America. So to me, that is my big takeaway. One side, the Democratic side, they want to raise taxes, and the Republican side, they want to encourage business, so as to help stimulate the economy and have a larger tax base, thereby having more tax. So those are the two different ways, as I said at the beginning, that I feel they are going to approach, or they are approaching, their tax strategies.
That's always been the age-old question: what stimulates more tax revenues, lower taxes or higher taxes? It's interesting that the U.S. Treasury, just for reference, in 2014 collected $3.02 trillion, 2015 $3.25 trillion, 2016 $3.27, 2017 $3.32, and it's gone up every year. And estimated 2020 is $3.71 trillion. So you take, that's a pretty significant double-digit increase in percentage of tax revenues that have been created under the current tax code versus the prior administration.
Right.
It's interesting to see how those revenues come through. And, like you said, the devil's in the details. Typically, it's not pulling a fire alarm saying everybody's, your rates are going up 2.6%, your brackets are getting contracted or compressed. It all comes into what strategies. They're always probably almost equal and opposite strategies that are in that code too. So it just comes, This comes down to tax planning and utilizing things like those credits. Those credits, whether the new market credits, I would assume that's going to be in a lot of green energy, and infrastructure investments that, they're going to basically, because those credits are how the government indirectly utilizes the populace to subsidize their initiatives, right?
Correct. Yes. It is very interesting, in reading and studying up on the two different tax plans and how different individuals can go at it in just such a different, diverse way. And I think your point that you brought up regarding the increase in taxes, which I think is due to an increase in tax base, I don't think raising taxes is our problem here in the United States. It's called the old age thing called budget. We have a hard time controlling spending.
Mhm.
Our spending is out of control. Now, obviously, during this COVID-19 time, this is a special time that I've never experienced. Nobody's ever experienced, unless you're real, real old, maybe. No, I don't even think that old. But I think if we could have, and if they could talk more about how they're going to curb spending, now I could get excited about that because then I really think we would be going in a positive direction.
Yeah, I think it may have been our boy Clinton, last one to balance the budget, and I think that's something that a lot of people have talked about and said they were going to do and have not yet done. I had a very close friend of mine text me today and said, how long would it take us to pay back $2.2 trillion? I'm assuming he's looking at proposed stimulus packages that are going through Congress right now. And I was like, well, the government collects about $3.5 trillion annually. I said, but they spend more than that. So,
Right, exactly. They not only do they have to balance the budget, but they've got to get rid of the annual deficit. I mean, you can't pay back on the debt until you get rid of the annual deficit.
You're just
So,
building
but
it.
yeah, that's just economics.
That's a whole
Anyway,
nother podcast. All right, Garland. Well, that's some really good stuff. So basically, let me ask you. I know that Trump. You mentioned the American tax credits, taking the corporate tax rate even down another point, and a penalty or tariffs on moving manufacturing or businesses out of the country and bringing it back in. Um, I know that he's looking at making permanent the Tax Cuts and Jobs Act because they're set to expire. Is that correct?
that's correct. I believe that different parts of it have different expiration dates,
Mm-hmm.
but I think the big date is 2025.
Gotcha. So I know he wants to make those permanent, and then, to summarize, it looks like Biden's plan would take the highest tax bracket from 37 to 39.6 back to where it was, but also looking at some bracket shift. That's really how you play with the numbers, is really moving the brackets, right?
Oh, without question. I mean, you're talking 2.6% raising of a rate, but that's not where the devil in the details again. I know I've said it multiple times, but it's so true. It's how they handle the brackets. If they compress them, if they enlarge them, if they leave them the same. If they leave them the same, that's not going to be a huge deal. But I just don't think that would be in their game plan. However, they don't want to really talk about that because then people can start calculating, well, hey, it's going to cost me another $16,000 a year or whatever the case may be based on your bracket or how you may fall into a new bracket.
Yeah, that can be material. The thing that gives me the most pause or you know constructive anxiety, I guess would be a good word, was when you mentioned that capital gains. If you make more than $1 million, your capital gains will be taxed at your ordinary tax rate. Most of the real estate and a lot of assets in this country are held by people that make more than $1 million, and that could freeze a lot of things because they will wait 8 years before paying 40% tax.
Yeah. I didn't really, I know we all have our own philosophies, but I can't help but think that other than the coronavirus happening, our economy was very robust and growing. I fear that this will make it slow down quite a bit.
Mm-hmm.
I don't see any other way that it just wouldn't have to slow down. And a lot of it has to do with the capital gains rate. For example, a lot of our clients own their own building.
Mm-hmm.
Well, they're gonna be cautious about selling because in that year they sell, it could very well put them well over $1 million. Well, when that happens, then now they're going to be taxed at significantly more, or could be taxed at significantly more. And here's something that I failed to mention. He wants to do away with the 1031 transfers. So let's say you sold the building and you were in a very negative long-term capital gains situation. You say, well, with the people that's in power in Washington, I don't want to recognize my taxes now because I will get killed. So what I'm going to do is I'm just going to kick the can and find some other property and do a 1031 exchange. Well, you really get cut because both sides of the sword are now sharp. Capital gains is way up, but yet you can't even do a 1031 exchange. I failed to mention that. That is a part of his proposal as well. He wants to do away with 1031 exchanges.
Oh man, I love the 1031s. Well, man, Garland, that's great information. You have any other tidbits you'd like to share with us on this one, or what do you think?
I really can't. I really can't think of anything. I would add to the long-term capital gains. With qualified dividends, it's taxed right now at long-term capital gains rates, and so the qualified dividends that people earn will also be taxed at a higher level. And I can tell you, the majority of the people that make over the $1 million in the United States, they don't make it from W-2 wages typically. They typically make it from capital gains, interest, and dividend income.
Right.
And Biden's act will definitely take a cut there. And he's trying to raise money. Now, he doesn't say what he's raising money for, and I wouldn't think he's going to all go on the debt. I'm sure there's projects that that they have in play or they would like to put in play. Yeah. But that's another thing to consider. It also will affect your ordinary dividends and interest potentially.
Well, Garland, as always, I truly appreciate your tax insight, and you're always willing to dig deep into the code and into the numbers so you can plan. And I know you've helped a lot of people save a lot of money. I know that as we get further into the election, a lot of the tax policies will become even more clear, and strategies will be most important between 2020 and 2021 if there is a change in administration. So I believe you're having a tax seminar or a tax webinar podcast in November. Is that correct?
Yes, we are. I think it's I can't remember the exact date, Chris. You may be able to help me here, but we are having one. And typically we've done this for 8 or 9 years in a row. And we've always had tax dinners in various cities. Well, due to COVID-19, we're doing a live podcast. I think you'll be joining me on that as well. So I'm really excited about this. This is where, because it's after the election, we always wait till after the election because we have a lot more clarity then. And we can not only tell you what's going to change, but some of the things that we can possibly do to help mitigate taxes.
Awesome. Well, we'll keep everybody posted as to when the specific dates and times are for that session, because it's always packed with a lot of saving and strategy opportunities. So again, Garland, thanks so much for joining us today. Hope you have a great weekend, and man, we'll talk to you soon. Okay.
All right. Thanks for having me, Chris.
Thanks, buddy.